Hi guys, welcome back to Father and Son Investing. Today's video is going to answer the question, just how small is Senseonics? And given the size of the company, what should investors expect from this company in the short term and hopefully the long term? So let's get to it. Now there are a number of ways that we can go about trying to measure the size of a company. We're going to talk about market cap today. We're going to talk about revenue today. We're going to talk about the number of customers or users of their product that Senseonics has. We're going to talk about cash on hand, and we're going to talk in relation to that as well about the cash burn that we can expect for this year. To do that, I'm also going to compare them to really what they want to become like, which is Dexcom. So after I've done that, then again, we'll talk about what we should expect from this company in the short term and the long term. First of all, let's talk about market cap. So we can see here from the CNBC website that Senseonics market cap is around $843 million. If you're not familiar with how to get market cap, we're going to take the share price, which is $1.82, and we're going to multiply that by the number of outstanding shares, which is almost 463 million. That's how we come up with 842 million as a market cap. Now, just in comparison, we're going to pull up Dexcom's information here, and we'll see that their market cap is more than 44 billion. We'll also see that the number of shares outstanding they have is only 97 million. Again, compare that back to Senseonics, which is 463 million shares. All right, so if we want to compare the companies by market cap, Dexcom is way larger, at least more than 43 times larger than Senseonics in terms of market cap. We're going to use this same site to look at the revenue. The revenue, TTM stands for trailing 12 months, is 13.68 million for Senseonics. When we go to Dexcom, we'll see that their revenue is $2.44 billion. I'm not even going to bother to do the math on that one. We can see that Senseonics revenue is really just a drop in the bucket compared to Dexcom's revenue. Next, we're going to compare the number of customers or users of the product that the two companies have. I've gotten this out of the fourth quarter earnings result or 2021 earnings call transcript that was done on March 1st of 2022 in regard to Senseonics. We don't know exactly how many patients Senseonics has, but we do get at least a rough estimate. From this, Tim Goodnow, the CEO, said, we do start with a basis of about a little bit over 2,500 patients in Europe, and there's about 600 in the United States. So we're looking at about 3,100 users or patients. Now it's a little tougher to figure out Dexcom's total customers, but this comes from their 2020 earnings, and we see that they had just about 900,000 or more than 900,000 global customers at that point. So I'm going to assume that it's about 1 million customers now, especially after they did a Super Bowl commercial a while back. So again, for comparison, we're looking at about 3,100 customers versus about 1 million customers between the two companies. You can get a feel for just how small Senseonics is. Next, I want to talk about their cash on hand, their expected burn rate, and as well, we'll talk about the revenue expectations for 2022. From the earnings call transcript, we see that as of the end of the year 2021, they had just shy of $182 million. This is Senseonics we're talking about. And we'll see that they expected to earn in the range of $14 million to $18 million for 2022. Looking into Dexcom's numbers from their financial statement for 2021, we see that they have more than $1 billion cash and cash equivalents on hand. And their guidance for 2022 says that they will have revenue of around $2.9 billion. All right, so hopefully that gives you just an idea of just what an infant this Senseonics company is in comparison to Dexcom. Now, why did I run through this whole exercise? Because I want to make sure that investors are keeping their expectations for this company in check. So just what should investors expect from Senseonics? There's actually a nice article in Seeking Alpha that appeared on March 10th of this year talking about Senseonics, and at the end of the article it highlights very much what investors should expect from this company. Number one is volatility. The stock has already showed extreme price swings occurring regularly despite an overarching downtrend. And because it is such a short-lived public company, that contributes some uncertainty as well around price movements. Now, as an example of volatility, we saw that on the day that they announced that the FDA had approved the SENS E3 continuous glucose monitor, the stock price actually went down because they concurrently gave the 2022 financial outlook, which was less than expected. And speaking of financials, what we can expect is inconsistent financials. Here's an example from this article. In 2019, they brought in $20 billion of revenue. They report net revenue, but $20 million of revenue. Now, in 2020, they only brought in $5 million of revenue. Now, of course, some of that was because of the COVID-19 pandemic, and because this is such a small company, they had a more difficult time trying to market their product. In fact, they closed down marketing of their product within the United States. Now, remember that we reported that the expected revenue for 2022 is in the range of $14 to $18 million. That doesn't even get back to the pre-pandemic level of $20 million that they brought in 2019. So there's that inconsistent financials. Lastly, investors should inspect low volume and liquidity. Now, at 800 million market cap, this is a small company, and what those companies are known for is low liquidity and wide bid-ask spreads. If you're not familiar with bid and ask spreads, anytime you purchase a stock, you'll be able to see that, what the bid is and what the ask is. Of course, that's related to the purchase and selling of those shares. And when you see that bid-ask spread, that is really where companies like Vanguard and Ameritrade and all those other brokers make their money, is between that bid-ask spread. Now, what else should investors expect from this company? I want to highlight a statement from the quarterly/yearly earnings report. What it says here is, given current inventory in the channel, we expect first quarter 22 revenue to be well below the fourth quarter 2021 revenue. So when this first quarter earnings report comes out, maybe May of this year, investors should expect to see the revenue plummet compared to the fourth quarter. That may turn a lot of investors off and put them in a selling mood, in which case the price I would expect to come down. So I'm going to be looking to maybe purchase more Senseonics after that first quarter earnings report comes out. What else should investors expect? They're going to burn about 65 to 70 million of their cash for operating expenses in 2022. Remember, I said that they have about 180 million in cash on hand. So we're looking at a third or more than a third of their cash on hand getting spent for operating expenses in 2022. Senseonics is kind of pushing forward here and really laying their cards on the table. What else should investors expect for 2022? Well, remember that they're starting with a basis of about 3,100 customers or users of their product. Tim Goodnow said, you will recall that previous efforts we put about 4,000 patients on the product in a full year. And then he says, I don't anticipate that we'll get that much this year. So what should we expect for the number of customers by the end of the year? I think reasonably 6,000 maybe customers by the end of the year. So don't expect a huge uptick in the number of users of their product for 2022. Now let's just wrap this up by discussing sort of the long-term outlook. I just talked about the short-term outlook. I'm not going to cover all the things about their future products because I've done that in other videos. This is just going to kind of discuss what investors might expect in the share price in the long run. So let's just look first at the long run of Dexcom's share price. Now here we go way back all the way to 2005. The shares were selling at a little bit more than $12 per share. Now I want to point out to you this very long run of really not doing much. By 2011, it actually had gone down. It was closing at $9.31 on that particular day. And then after we start to see that it just makes this slow climb, of course, then it made this rapid steep climb in recent years as their product has improved. But I want to point out that this has taken 17 years to get to this point of $454 a share. Now, if we just look at the Senseonics long-term chart, of course, they've only been a public company for 2015, so we don't have a lot of data here. But we can see that back in 2015, it started at $3.25 a share. The current price is obviously much less than that. So anyone who invested back in 2015 has lost money here. Now, I say lost money, you don't actually lose money until you sell the shares. That's when you lock in your losses. So the shares are worth less, but the owners of the shares haven't necessarily lost money. However, if you were lucky enough to buy here in June of 2020 at a little shy of 39 cents a share, well, then you certainly have made money. Here's a good example then of this volatility in the stock, and we should expect that from small cap companies. So what could potentially happen long term? I say potentially because I don't know that Senseonics will exist as a company in the next 5 years. There's a good chance, I think, that they get bought out by somebody else. But should they continue to exist as a company, I think that we're looking at something like this, where investors may have to hold for a very long time, 17 years, in order to see fantastic gains in the share price. Of course, all of this might get upended by new technology coming out. I discussed in a previous video that Apple is working on trying to incorporate glucose sensing within their Apple Watch. If they pull that off, Dexcom, Senseonics, the makers of Libre, they all start losing money like crazy because the Apple Watch will supplant any and all of these other methods. All right, that's what I have for you today. Hopefully this information was helpful for you. I've given you an idea of just how small this company is and what we should expect from this company short term and hopefully I say long term. If this was helpful for you, please give us a thumbs up, and we'd love to have you as a subscriber. Share this information with a young person in your life. This is all about adults and children or younger people learning to invest together. And as always, until next time, enjoy your investing.